At that time, as a team, we decide, depending on how the market is appreciated, are we going to refinance that asset then? Or are we going to sell the asset? That decision is made. But, usually we lay out a couple different potential exits, and the asset timing, you don't push an asset. Okay, we work on the asset. The asset timing, the market will dictate which exit comes into play at that time.
I mean, I like those ones just because I'm liking how clean it is for like if we stick it on a t-shirt or
it looks
all this
good.
kind of stuff, right?
All right, anyways, listen, relax.
Yeah.
We can't talk about that one there anymore.
No, got it.
We're done. All right, so there's going to be a great reveal of what you were just talking about there.
Love it.
You guys are looking sharp.
Yes, thank you. Likewise, sir.
I forgot my jacket. I should have brought my jacket, but it's okay. I'm the host.
Yeah.
How you guys doing?
Good.
Yeah?
Good. Doing great.
Awesome. Listen, I'm excited to do this with you guys. This has been in the works now for almost a year.
Feels like it's been a few, but maybe you're right. Yeah.
I think so. And you know what? And that's a good point. And I think people need to understand that when you're getting into business with people, you want to, not only should it be something that complements you, but it should also be, do I like you? Can I hang out with you? Mm-hmm. And I think we've built that, and we're growing that as we continue to do this. And I mean, the business isn't even complete yet and ready to rock, but it's there. It's getting there.
Yeah.
And that's because, we like hanging out with each other.
Absolutely.
Yeah.
I believe it was Warren Buffett who said, if I can't shake hands with another person and make a deal, there's no amount of paperwork that will save me. And that's this relationship that far beyond the paperwork, the being able to shake hands, you say you're going to do what you're going to do, and you do that, and you can count on me to do that.
That's it.
Right. Well, you mentioned off camera before we started, you were talking about different communities and folks. And when people align, regardless, it's more important than just dollars and cents. Mm-hmm. It's an alignment. It's like, know, and trust. It's friendship. That supersedes other things, right? And you're right. That has to align first before we even sit down and have discussions about business.
Yeah, Karen. Yeah, 100%. Okay, listen, I want to dive into it. There's 3 things that I want to talk about today, 3 main things. So getting started, legal requirements, taxation, the whole setup, like how do we do that, right? And this is obviously about us investing down in the U.S., mm-hmm. Okay? Why the U.S.? Why are we even shifting? And what particular market did we decide to pick? And then the last thing is the strategy and things to know and things to avoid, all right? So let's get into it. Like, how do you even set this thing up? The whole GP, LP, lawyers, accountants. And what does a GP, LP even mean for somebody who's listening and they don't know?
Good starting point. I think that it's important to recognize that, like you said, a lot of work goes into front loading all the research. Like this is, in some cases, years of research, information, and knowledge to be able to have this discussion, right? So once we dive in, we mitigate risk, we do all the research, we take a step back and say, okay, at a high level, what are all these things? GPLP, what is that? What does it mean? Well, what does it stand for? General partnership and limited partnership. Okay, so really the reason we talk about that when we talk about the US, and we're going to be specific to the US, is just based on taxation. The reason why as Canadians it's so important that we look at those structures is because if you're an American down there, they talk about this LLC structure, this LLC corporation. Mm-hmm. Now, as a Canadian, the problem is that without getting too specific, the CRA doesn't recognize an LLC as it pertains to income. So we have to set up a structure that allows for what we call a flow through. So the money you make down there, you can flow back to Canada based on the tax treaty we have with America, and you can protect your money. That's kind of like the overall basic reason why we set up this general partnership and this limited partnership.
Got it. Okay. And what about you're going to say something.
This is not tax advice.
No, listen, it never is tax advice. I might say some stuff on it, but I'm like, always refer to your accountant, right?
Disclaimer.
What's good for me may not be good for you, right? And
absolutely, because every situation is specific on what you're trying to achieve, right? What the outcome is for the money, for where you want it to flow. And I don't know if we're going to talk about this a little later, but the question of, do you want money to come back to Canada? Do you want money to stay in the States? So there's a number of, do you have a trust? There's all sorts of questions in there, and people have those concerns. Now, here's the I think the important part is that because there are so many questions, most people get confused right there and stop. And that's the key. And that's even the key for why you partner up, why you look for a team. Those are the reasons that you look for guidance along the way. Otherwise, you just never step out and take those opportunities.
Yeah. And look, we talk about this all the time, the importance of having a good team.
Yeah.
Like, I shouldn't be going to a seminar. For anybody who's brand new, you should not go to a seminar, come back with all these, accountant advice and saying, here's what this accountant said on stage, and then come back and tell your accountant, this is what I want to do. Right. Your accountant should be telling you what to do. That's how you know when you have a good accountant or a good lawyer. Like, let them set that up for you, saying, well, this is where I'm trying to go. And your accountant will say, okay, well, this is how we're going to do it.
Yeah.
Right. Yeah. I mean, look, you can throw the ideas out. Obviously,
absolutely.
but
Bring it back to the accountant and say, hey, I heard about this.
Exactly.
Does this fit into what we're doing?
Exactly.
Right?
Now, what about the currency exchange? That's obviously something that people want to know and understand. How does that work?
Yeah, and again, just to make it as simple as possible, you get the Canadian dollar, the US dollar, regardless of how they're performing and how the market is going. When you're investing in the US, you're investing, everything is priced in American dollars, just like your income is earned in American dollars. So, you have to, if you're investing into a property down there and the income that you're earning is USD, it's relative, right? So if you're budgeting, and you're a Canadian and you're looking at, you're being presented deals, those deals are in US dollars. But like Neil said, if you're earning in US dollars and you're either leaving it there or you're bringing it back, that conversion happens across the border. So you're earning, you may pay more Canadian dollars for the property or for the investment that you're making in that investment team, but you're earning in American dollars. If you bring it back, it gets converted.
Right. Yeah. And what about taxation? Like, do they've got to now go through anything complex?
Can I just interrupt for a quick second? Before you get into taxation, the currency exchange, the thing that people get caught up on the currency exchange, typically we're somewhere in around 30 cents different. But people get caught up on it because we know that sometimes our currency gets stronger and the U.S. currency gets, so let me hold on and let me wait.
Let me time it.
Right? Trying to time it. Is that opportunity there? Absolutely. We have seen it. There are times where the Canadian dollar and the American dollar have come really close to par. Absolutely, it's an opportunity. But if you're waiting for that next opportunity, you're never going to have a deal ready at the same time. And so you've got to be able to be ahead of that. And then there's in real estate, the opportunity is to actually hold on to it and make money the whole way through, right?
Yeah.
You want to ride that wave.
If I can add to just a little bit as it pertains to currency exchange as well. Most investors that we're working with and we're going to be working with in these transactions are going to be, it's going to be a one-time, injection of capital. For folks who are doing this often, another question that comes up is, fees, wiring fees, transfer fees, things like that. Well, we do have partnerships with companies that are exchange companies cross-border. So we do take advantage of things like, to take a step back, if you just walk into the bank and you try to make a currency exchange in the bank, you're paying fees, double. You're paying the currency exchange, their fee, and you're paying to go ahead and transfer that down south. So we work with companies that have lower fees, lower rates, and lower fees. So these things are other ways that we, with volume, we're able to take advantage of different things to help our investors as well.
Okay. Now, moving on to taxation, right? You take a look at these performers and there's got all kinds of crazy ass numbers on it. So, somebody's listening like, okay, look, I want to invest with you guys, but how complex is this from a taxation standpoint? Like, do you give me the numbers and I got to kind of plug them into a sheet, or do you just give me like a TX form or whatever the form may be?
Yeah, great.
This is the most complex thing in North America is the tax code, and it's done on purpose. I want to be clear. This is, people get afraid. That's the whole point, is the tax, all the tax stuff. It is complicated. And Nate,
Yeah, this is why we set up the power team, right, Gary? You mentioned this is why we've gone out. We have multiple cross-border CPAs and attorneys and professionals that this is all they do. So even what we've been doing as a team, what have we been doing? How many meetings have we been having with multiple professionals to make sure that we have all of the answers and systems in place for our investment partners so that they have to do close to nothing. And as Neil mentioned earlier, what's very important is that it does depend on your particular situation. Are you investing in your personal name from a corporation? These types of things matter to an extent on your own personal taxes, but the most important thing to remember is this: there's a tax treaty in place between Canada and America. Yeah. And the bottom line is that you pay tax on one side of the border, and we, with our help and our guidance, we help to show you how that happens. Because with that GPLP structure, with the proper cross-border system that we have, you're paying tax on one side of the border. It's not as though it's like, I'm being, do I have to be taxed on the property there, then I'm taxed when I bring it over, then I'm taxed on this side. That's not the way that it works. That's why we have this power team set up.
Mm-hmm. Yeah. Let me just say one other thing about that, because I'm sure some of your listeners are like, I just want to go do this on my own. I would suggest that you consider doing it with a team first. And then if you want to break out onto your own and do that, then by all means, because you want a mentor, you want someone that's already been there, that's already done it, that can show you how to do it so that you can avoid, because lots of people have done things like this and gone into the States and then they get stuck into double taxation, situations. There is a lot that can trip you up. Go with someone first, partner, learn, and then if you want to break out on your own.
Yeah. No, listen, I agree. Even when I look back at my beginning infancy steps in real estate investing, and as I was growing, then I started getting joint venture partners. But I was like, hey, look, you can do this on your own, but you can also partner with me. You decide, but here's the advantage of doing it. And then you go through the whole process and you're like, okay, I got it. I saw it. It's not that complex. I think I can do this on my own. Or, yeah, you know what? I want you guys to continue to keep doing it because I actually want to take the kids to gymnastics and volleyball and whatever else shit that you're doing, right? So
yeah, and you touched on another important point, and that is just this whole cross-border thing. It does add another element to it, and there are things like, an ITIN number that folks are going to need. This is, you're going to be like a tax identification number that the IRS requires somebody to have if they're generating income. These are the sorts of things that we front load the work on.
Are we getting too deep into this, Gary? Or?
No, let's keep going.
Okay.
I'm not going to go much deep. Good point there, Neil. I'm not going to get much deeper than that, but just letting folks know on a high level that these are the things that, as you mentioned, that the team that we put together, we're putting all of this information in place so that an investor doesn't have to have all that knowledge and information to be able to invest comfortably. That's what we're doing. We're front loading all that knowledge and information for them.
Now, what about funds? What can you use, right? Can you use your RSPs? Can you use LIRAs? Have we, how does that work?
Yeah. So right now registered funds are not available to be used in that way. There's certain structures that you need to set up, which we are actually working on. But currently you can use cash to be able to go invest. One of the
and HELOC, you can use your HELOC obviously as well too.
Yeah, you can use any of those forms. But once you get into registered, there are certain requirements because we're now talking about requirements through CRA and in terms of being able to do that. And so there's different entities that will have to be set up, and we're not there at this point in time.
Yeah. Okay. Anything else just in regards to the setup and the taxation that we need to know before we kind of move on?
From an investor's standpoint, no. From an investor's standpoint, it's really quite simple. If they once they have all their answers and they're comfortable with the deal that we're working on, the team and things like that, our team puts the rest of it together.
Yeah.
That's really where we are at this point. There's nothing else that they need to know in that regard.
I guess one last question I'll ask before we do move on is, being hundreds of miles away, you obviously need a team that's going to manage that property while we're up here, right? Property manager. Is somebody on site? Yeah. The construction crew. Do we have it all set up?
Yeah.
Excellent
Well,
questions.
Look, I'm married, father of 4, and I live a distance from here, right? And people, this is an interesting one because there's some people like to have all their investments really close to them. I'm of the mindset that I'm trying to live my life. I've got my family. You've got to have structures in place. Otherwise, what's going to happen? You're going to end up going over and doing work, and you have to learn to be a better manager. You need to have people in place that are going to do that. If you're looking for more, I'm just going to speak to your listeners for a second here, guys. If you're looking for more work, you can go get another job. It's easier. You can do these types of things, but that's not what this is about. It's not looking for more work to do. So being able to work, have these investments at a distance, it allows you to employ OPR. We always talk OPM. This is OPR, other people's resources or other people's time, OPT, right? And allow them to be that leverage so that they're over there and doing that work for you. And you're able to live your life. You get back your time. That's part of the plan, right? So the question is then, all right, how do you do that? How do you work at a distance and trust that someone's not stealing from you? How can you know that?
Yeah, there's a twofold answer there, and the first is how do we start? Where's the structure set up? And that's where all of the hard work, front load work comes in with what we call building a power team. We call it boots on the ground. We actually go into the cities. And we take months and months and months, and sometimes more than that, to make sure that we identify. And we have a very prudent process to make sure we identify each part of a power team. And there are multiple parts on each segment. So, for example, multiple appraisers, multiple accountants, multiple construction teams, multiple realtors, multiple property management teams. Because as a real estate investor, we know things never go exactly to plan. And we always have to be sure that in the event that something doesn't go to plan, we're prepared. We have an exit strategy. And that is not just financially, that's with the actual hard crew on the ground. So first, the work is front loading the team, making sure that everyone we have that we need, we have and is in place.
Absolutely.
And then it's ongoing management. This is not a passive thing. This is a very active, and we're very actively managing the asset. That's why we're called asset managers. We manage the asset through the entire process very actively, which means that constant communication with the entire team and actively being there on the site. I don't not go to the city that I'm investing in because I am the active manager. I go to Cleveland, I go to Dallas, I go to Moncton. I go there, right? I'm not passively investing. I am active so that the rest of the investment team doesn't have to be.
Right. Yeah. You know what? There's a lot of different OPs, right? OPM, other people's money, other people's resources, other people's time. OPP, other people's people.
Absolutely.
We remember that one, don't we?
Yeah. Look, this is the game, right?
Yeah.
That is the game. You can have 100%. What's that saying? You can have 100% of your
nothing.
Nothing, or your own efforts, or 1% of 1,000 or 10,000 people, right?
Yeah,
like
for sure. All right, listen, let's move on.
Yeah.
So why the U.S. and why specifically Cleveland?
Great question. I think that when we ask ourselves why the U.S., you have to look at where you're coming from as a real estate investor. This is our chosen path that we're talking about for this particular avenue of wealth build. And if you compare, quite frankly, Canada, which is where I started real estate investing, and then I compared that to the metrics and the US market, where the two countries are headed, where the opportunities are. That's the reason why when I went down there initially and I saw what the metrics are, we can get into the details of those metrics, why the US makes so much more sense, not just now. As an investor, we don't just look at now. We look at where the economies are headed and where the opportunities are headed and where the growth trajectory is. And the U.S. Has all of the positive indicators in the markets that we're looking at.
Yeah, and the one thing that I loved when I went down there, because we did the boots on the ground, and when you take a look at the numbers per door, price per door, I mean, you're in that, what, $40,000, $50,000, $60,000 range when you compare those numbers to like up here in Ontario. What are we at right now? Obviously, depending on the market, but what, 200,000 and north of that? You know, that's a huge difference.
Yeah, I mean, like you said, when you mentioned why U.S., there are several reasons why. That's one of them, depending on how deep people's pockets are and how much they want to invest, and if their objective is cash flow or appreciation. You know, we can look at all these things as professional investors. These are the things that we look at and consider. But why the U.S.? For me, all of the metrics made the most sense, and that's the reason why I started initially going back my initial research before jumping in and really diving in deep.
You know, I look at all of those are correct. I look at one other aspect from a wealth building standpoint. Mm-hmm. You know, we always talk about diversification. It's talked about, but people don't necessarily understand what does that mean. When you're building wealth in a certain location, all your exposure is in that location. So what do you start doing? You start buying properties maybe in other parts of the country, but you also want to look at the flow of your money when you're talking about wealth building. Where are the places that it's going to get caught up? And sometimes it's taxation, sometimes it's, you know, all these people have strategies for how they're going to make money, but there's very few people that look at multiple strategies of that. And where does that go next? And where does that go next? Why look into the U.S.? Because if your money is all in Canada, and people have heard this, they understand this, they can feel this intrinsically, that there is something uncertain about what's happening to the Canadian dollar. And so from a wealth building standpoint, it's just called diversification. Move some money other places. How many people do we know of that are moving money into other countries? Because of the uncertainty here. That's what happens throughout the history of the world. When things get uncertain, people start moving money into other places because you have to protect your wealth. And so why move it down to the States rather than leaving amounts of money here? Because there are all of these tax advantages. There are all of these investments that are producing above what ours are producing. And quite frankly, you have the options to be able to move money more freely.
Yeah, listen, those are all, I think, very good points. You know, even for myself, I've picked up a property down in Mexico, and I'm not huge on diversification across.
Wait, why Mexico? Why not Wasaga Beach?
Well,
you know what I'm saying?
Yeah, no,
right?
it's a good question, right? Yeah, you're taking a look at what other big countries are doing. You got the BRICS, right? You start taking a look at that type of stuff. Yeah. Also, where I was going with that, though, too, diversification. I think you have to be careful of diversification. Diversification is important, but not across platforms that you don't know.
Right.
So I'm diversified within a specific class, which is now real estate that I understand, and I diversify in now different countries and different parts of it, whether it be private lending or whether it be moving into the US or down in Mexico or here in Canada. I'm diversifying within things that I understand and know.
Mm-hmm. Yeah.
And also partnering with people who also understand different parts of the business that I may not understand, but we complement each other.
Yeah. Well, as you know, Gary, I've studied a lot about money for years, and and so that's really where this came from. You look for the opportunities for where is money going to flow to next. That's never mind where it was, where's it going to next? But being able to look back and seeing where money has flowed from through history helps you to understand a little bit more of where it's going next. And so, and you and I have had these discussions offline in terms of what they come for and being able to see the signs when they're coming for your money. I mean, I don't think anyone listening to this, it's going to be a surprise. We know the April Fool's joke that's coming up. We know what we're all about to get hit with here in Canada. So you've got to find alternate ways.
What is it?
The carbon tax, 23%.
Yeah, listen, man. My wife is complaining every day about that. It's wild.
Absolutely.
Wild. Yeah.
Right? Like, these are not independent. Like, you want to make money over here. If you want to make money in multifamily, you have to understand how that's going to impact all of the people that live in that unit.
Yeah.
How it's going to affect your asset, right?
Yeah, for
and
sure.
so
Yeah,
all of these things.
Yeah, those are all
kick in.
good points.
Early on, with that question, why US? I had an economist put it to me this way. Okay, 2 quick questions. One, if I could give you $1, Canadian or American, which one would you rather have?
Right now, American.
America.
Okay, well,
Yep.
ever probably, right? And the second is, again, right now, who is the world's only still greatest superpower? What country?
Yeah.
U.S.
Okay, so you mentioned BRICS, all these different things, but in reality, let's just break it down and make things as simple as possible, right? That test right in front of you. Which dollar would you rather have, and which country is the world's superpower still?
Yeah.
Easy.
Yeah.
100%. Listen, Mexico is also blue waters and sand.
Yeah.
All right. So yeah, listen, yeah,
my kind of diversification.
yeah, 100%. Right. But you're right though, right? And the other thing as well too, you have to remember is that they've got the largest network when it comes to being able to move money across the world, and everybody knows the U.S. dollar, right? So it's a common household name, 100%.
Absolutely.
What about tenant profiles? Let's kind of dive back into this stuff here. So tenant profiles,
Very different.
yeah,
Very different.
and also the rules, because that's
my
obviously the big issue as well here in Ontario. Is getting a tenant out. We know, what are we sitting at, 8-9 months to a year
at least. Yeah. No, you asked a very good question there. And when we talk about the whole picture, in fact, when it comes to US and states and laws and things like that, the whole package itself, each state, it's very important to recognize that how US differs from Canada in another way is the US breaks down their neighborhoods. Their state is broken down into counties, and the counties are broken down. It's very, 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 very segmented. So one part of the learning curve is when you go down there is understanding exactly how the cities are structured and how the communities are structured as an investor, because you could be across the street from a county that has different laws from where you are. So the first part, again, being the power team, is doing the research to understand all of these laws, and then taking advantage of the ones that are in your favor. So landlord friendliness, for example. Why Ohio? You asked that question earlier. We'll dive right into the reason. A big reason is that it's what we call landlord friendly state, which means a few different things, but quite simply put, if you ever do have a problem with a tenant, as opposed to having to take 8, 9, 12 months with a landlord tenant board, tenants stop paying rent, you're out of pocket. Down in Ohio, maximum 5 weeks for a huge problem. Anywhere between 3 and 5 weeks, we're able to make sure that we can have a tenant moved out and relocated in the event that there's an issue.
That's wild.
It's wild, isn't it?
Yeah.
I mean,
it shouldn't be wild, but I mean, when you compare it to Ontario, it is wild. There was a time in Ontario when it was like 2 months or 3 months. Well, maybe not 2, maybe 3 or 4.
Yeah. And I mean, it's it makes sense. That's the way it really should be. I mean, we have an agreement here. I'm going to provide you with good quality housing. You're going to pay me. And if you don't, you leave. I mean, it sounds simple, doesn't it? I mean, I think that makes sense.
Yeah.
And in America, being capitalists and being in favor of, a good market, they say, absolutely. If you don't pay, these are the laws, and we govern them accordingly. And that's something that we really, really like in our favor. In addition to other landlord-friendly areas in different segments of the market that we enjoy, things like rent, for example. There's no rent control. So unlike here as well, a tenant can move in. Not only can they move in Ontario and stop paying you, but they know that their rent is controlled. They can stay there and they can be legacy tenants. They can stay forever. And what is the maximum? I think 2.5% a year now. It went up. That's the amount that we can increase rent in Ontario. But there is no rent control in the counties we invest in Ohio. So that means that the rent can increase each year. It can increase if we are in the process of stabilizing a property, which means that we're going to be turning over the units. We're able to increase the rent to a fair market rent without question.
Yeah. Okay.
Now, doesn't that, let me ask you this one. What happens if you go and raise the rent? Because some people, their teeth are coming out right now. But here's the thing. You raise your rent you double it. What happens? Why can't I just do that in the States, right? Because they don't let us do that here. So obviously there's something wrong with a place that allows you to double rents.
Do you mean why do they allow you to do that?
Yeah, why do they allow you to do that?
Well, they allow you to do that for a few different reasons. Now, first off, if the rent is well under market rent in the neighborhood, they allow you to bring it up to a fair level market rent. It's not as though you're going to be taking a rent that is an average rent in the area is $1,200. You're going to make it $2,400. No one's going to pay that rent.
Exactly. And that right there is the piece that people miss.
And you're not putting tenants out, because the reality that it's not the perception from both the tenant's eyes and the landlord eyes in America is not as though, oh, you're putting a tenant out, you're stiffing them, they're hard done by. No, it's, if you say to a tenant, look, you're paying $600 in this unit, the market here is $950. And you're open and you communicate with them that, our objective is to, do some renovations and rent it at $950. Please, we would love for you to stay. If not, then, you can certainly go and find a place in the area, in the neighborhood, that is the same price that they're already paying, and they're more than happy to say, not a problem, I understand.
Right.
Yes.
And they probably have more properties or homes to choose from as well too. So now
more supply.
Right. So you got to make sure that your property looks good and you're running a building properly and efficiently for them to want to also stay as well too. They may say, screw you, this is an ugly building anyways. You're going to charge me $9. There's another one right down the street that I can get for $9.
Exactly. Right. The fair market value, right? Which we don't have here.
Yeah.
Right. Because we don't have enough supply. And I mean, it's a daily topic about all the rules and regulations and the bureaucracy. We're trying to get more properties built here. And well, so what happens? Renters are left stuck, not being able to go somewhere else.
Yeah.
So we have a lot of conflict. Now, unfortunately, the result here has been that they've put more laws in place to protect the tenant rather than push towards creating more supply.
Yeah.
Whereas when we go to the States, that's why there's a much friendlier relationship between the landlord and the tenant in Ohio.
One last question before we move on. In regards to, and I just lost my question now. In regards to,
I mean, you remember that guy we went and visited, and he let us into his place, and such a great conversation and introduced us to us.
That the tenant there.
The tenant, right? Like,
it was good.
He's telling us about his artwork. Like, that's a completely different tenant landlord type relationship, right? Than you have here. There's nothing adversarial. Instead, you understand that we're working together to give you a great living accommodation, and in turn, we do well as well.
Yeah, agreed. In regards to, I made me lose it again. How does Cleveland or even Ohio compare to other states in the U.S. when it comes to what are some of the best states to invest in? I think I think they had like 2 or 3 that were in the top 10.
Cleveland, you mean Ohio?
Yeah, Ohio.
Yeah, Ohio is in the top 10. Yeah, and that is to answer your question, it's very, very, very different across America. Very different. So again, it's not as though it's a wise decision for somebody to just throw their money into a state and figure it's going to work out, because what we're talking about here applies everywhere. No, that's not the case at all. It's very state specific, and then again, and then under the state again, it breaks down into the counties. But people talk about. I would say that there are some states right now that have become popular, that are more, sexy among the kind of Ontario investing crowd for people looking into the states. And that would be Florida, Arizona, Texas, Ohio. There are these states that people see as being places to go. And the reason is because they are considered to be landlord friendly to an extent. Right. And then there are others that are comparable to Ontario. California is an example where their laws are very similar to Ontario. It's extremely expensive. It's very difficult to manage tenants there. And it would be more of a tenant focused law structure system. And then there are certain states that are very few, but a couple that are extremely aggressive. And it's actually illegal for you to not pay rent, and you can actually be jailed for not paying rent. So it's right across. Wild. It's right across the board.
Yeah.
But we do tend to lean towards places that are, I would consider, we call it landlord friendly, but let me just be clear here. I would consider it to be fair. It's fair. It's fair on both sides.
Yeah. Okay. Yeah. All right. Awesome. Listen, let's move on to the last part here. I want to talk about the specific strategy that we're deciding to move into. How large of a multi-unit are we looking at, and what are we doing? Are we keeping these properties? Are we flipping them? What are we doing with this particular strategy?
Well, in our case, you never want to look at anything really under 10 units for starters. Why? Because it needs to be able to have property management, unless you want to start fixing toilets in, right? So you always want to make sure that for us, we're looking for nothing lower than that. But as we remember, we've looked at properties much larger. Do you want to say something about this?
Yeah, you asked a few questions there. So I'm going to unpack that. You mentioned what's the strategy. I'll start there. The strategy that we employ is a very specific one. It's called the value add strategy, where we are looking for assets that have room for us to lift their value. So what that means is that we're going to be looking at apartments, multi-family properties that are not already fully renovated. So people use the term turnkey, the type of which is fine if you're into that strategy. The strategy that we're employing is we do not want a turnkey property. We want a property that is going to be, if you look at a grade level A, B, C, D, E, F, A being like the top quality new build, and F being kind of dilapidated. We saw a few of those. We're kind of looking in the BC range of quality property. And the reason for that, and neighborhood, and the reason for that is because there's meat on the bone there. We're going to come into an asset that, if it's a 50 unit building, to give a number, we've been looking at 50 units as a good number for a building and an apartment to acquire. There may have been 8 or 9 units already renovated, and the rest of the property still requires units to be renovated, some common areas to be renovated, so that what we're doing is we're acquiring an asset that's under its potential value. So let's say, to use round numbers, we buy a building for $2 million, but we know, we've done the research, we've done the underwriting, we know that with a certain amount of invested capital to renovate that property, the after repair value or after renovation value, when we use our exit strategy, we know that $2 million buy may be worth $3.5 million, to just use simple numbers there. So we've gone ahead and we've lifted the value. We've forced the appreciation of that asset, therefore taking the invested dollars, the percentage of your investment rises up with that after repair value. That's how we're able to use investment dollars and return investment capital to investors, because we've controlled the process with the value add strategy.
And how long does that typically take?
Oh, that's a great question. That takes that's part of our underwriting and our anticipation and how we spread out our chart. So it's deal specific. Every asset is specific. So depending on the asset, it can take under a year, and in some cases it can take 3 years. In some cases it can take 5 years. I mean, I'm familiar with teams that are doing 300 plus unit assets, and it's taking them. Obviously, they're looking at a 5-year turnaround, and the reward is great as a result. That usually the lift is substantial.
Yeah.
So, and like as Neil mentioned, if we're looking at a smaller asset that might be 20 units, we may be able to turn that around in 8 months, but it's deal specific. So And, we always make sure that we're as transparent as possible with investors and let them know this is kind of an anticipated timeline. This is what we can expect. Invested dollars there for 3 years or for 5 years. And if we can deliver sooner, that's fantastic.
Yeah. There's something to understand about the mentality when looking. The larger the properties are that you're looking at, the more expensive they are that you're looking at, the less competition you're going to have, which allows you the increased profit margins. Now, when you get into really large, we know there's huge profit margins when you get into, you're buying a baseball stadium or something like, right? You're talking about a whole nother level. Governments kick in. Understand the mindset here if you can. Is that there is huge margins because there's not enough competition out there, right? People can't compete at that rare air. Now, when you come all the way down, because people are probably wondering, well, why don't I just go and buy a property and flip? You have to compete with all the other people that can afford to buy that property. And so there's a space in here, and this is why we're talking in these numbers, where you're able to come in and have an advantage, a competitive advantage, so that you can increase, you can enjoy, you can get that difference, that spread that the lift that Nathan was just talking about.
Yeah.
And that's the opportunity for people that you realize when we come together, we're able to compete in that space that you and I as individuals wouldn't be able to enjoy that.
Right. This is where now you're partnering with a team that has the understanding and the know-how on competing in these type of markets, raising capital, and then doing it as a larger team to be able to compete in those type of markets.
Yes.
Yeah. No, so it's a really good point.
As a community, having that mindset that as a group, you can't.
Yeah.
Right. We're stronger together.
100%. What about the tenant profile? I want to touch on tenants again. Are we going after any kind of specific tenants? Section 8, maybe touch on that. What is Section 8? And will it be a combination of that and regular families?
Yeah, great question as well, Gary. It's going to depend on the actual neighborhood and community that the asset that we acquire is in, because some communities are, more conducive to subsidized, a tenant profile. What that means is you mentioned Section 8 there, and a lot of Canadians probably have never heard the term before. Right. So Section 8 is really, it's a program in America where the American government helps certain folks who qualify by providing them with funds, and those funds are put towards their housing. So the American government is paying for their housing. It's great. It's a great program for both the tenants and for the property owners, because the tenants get the help that they need. These folks work. They have jobs. They just need a little bit of help, usually topping up the amount of money they're making to cover their living expenses and their life expenses. And as a landlord, you're guaranteed rent with Section 8 housing because the government pays the landlord directly. So there's an advantage there as a landlord that you're getting guaranteed rent. There's more management involved with Section 8 housing because there's annual applications. There are things that need to be done, but Section 8 housing certainly has its advantages. A lot of properties in Ohio are a hybrid, where some of the units in the building are occupied by folks who are on Section 8, and some units are occupied by folks who pay their rent out of pocket. Now, it all depends on the neighborhood. Like I said, if we're acquiring an asset in an area that's a student area, you're probably going to have a heavy student base there. If we're acquiring a property in an area that is an extremely blue collar, right down the street from a large plant, there are probably going to be quite a few tenants there that are making some pretty good money. They're going to be very comfortable paying their own rent, and there'll be a very small number of folks who are Section 8. and sometimes there are none. But that's kind of what Section 8 is, and that'll all be dependent on where the asset is purchased.
What about the exit strategy? Are we planning on keeping these properties? Do we flip them? Is that kind of still all in the works?
Yeah,
Yes,
exit
yes, and
strategies
yes.
again are very deal specific, and there are multiple exits created for each asset. We never look at a property and say, this is the property. This is what we have to do. If we don't, we're all in trouble. No, we look at the asset and say, okay, there are a couple different scenarios here, and if A happens, then we pivot to B. If B happens, we pivot to C. We need to make sure that we mitigate risk by using exit strategies. So in some cases, it may be, listen, we anticipate that we're going to have this asset. We're going to start returning investor capital by the fourth quarter, investor returns, and we think that we're going to stabilize the property in 3 years. And at that time, as a team, we decide, depending on how the market is appreciated, are we going to refinance that asset then? Or are we going to sell the asset? That decision is made. But, usually we lay out a couple different potential exits, and the asset timing, you don't push an asset. Okay, we work on the asset. The asset timing, the market will dictate which exit comes into play at that time.
Yeah. And you know what? That goes to say for almost any type of a strategy is you want multiple exit strategies.
Yeah.
I remember when the
Absolutely.
market was hot back in 2016 and there was a couple of investors that wanted to flip. And I'm like, okay, cool. But we should find a property that has a separate entrance, maybe turn into a 2-unit. And
Yes.
just in case the market goes down, we can hold it, right? So you want to make sure that it's not just, well, this is the only strategy, because if you stick to this strategy and it doesn't work, then what do you do?
Yeah.
Right? And you're in trouble.
We have one fundamental difference that that we believe in. We believe in building a community, right? And so there's something about loyalty in there. And so we've recognized that for people that are on the investor side, that are on the equity side, that are willing to ride with us, ride or die or whatever. Now that I got a motorcycle, that's what I'm now the people that are willing to ride or die, like that's what we're about, right? Because how many people are out there making money and then they're on the beach by themselves, right? And so there's a simple mission in there where we're like, we want to do something a little bit different. So at a high level, I do want to be clear that the mission is to take as many people with us, for the long-term journey, right? For the 20, the 30-year journey, let's keep going. But then when you cut it down, yes, deal by deal, there's differences there. And I just want to make that clear, because for me, there is a distinction. You can go make money anywhere, right? We've talked about this. We could all go make money anywhere, do whatever we can, but there's something about being with people that are genuine, it's easier as capital allocators, as investors, when you know what your investor is looking to achieve. It's literally easier to invest. The people that are out there and just taking anybody's money, they've just got to hope that they can provide for that person. They're always having to sell. But when you get to know the investors, the people that are pooling money, that are bringing it in, now we're fighting for them as well, right? And people get that, which is part of the reason that we've never really had trouble raising money for anything. But
yeah, for sure. Listen, guys, we're getting kind of close to the end here. Anything else that I didn't touch on or that we didn't touch on that we should?
Well, I mean, I think that investing in the U.S. has become a popular topic among Canadians. I would say that for good reason. I'm a dual citizen. So personally, my journey started when I started talking to a cousin of mine who was talking about his investments down there, and it sparked my interest. And this is going back years. And then I started my journey and doing my research. I would say that if you're thinking about investing in the US and you're a Canadian, I would say please be sure that you make sure that you connect with people who are doing it, that have been doing it, that have experience, that have resources that you can make sure that you can tap into that have applicable, practical experience and knowledge. Because, there's a lot of noise right now in Canada with people investing in the US, and you need to make sure that you make good decisions before you just jump in.
Yeah, agreed.
For me, there was something different. And then again, it's about money, your money and where it's flowing. And for me, the moment I saw the government start controlling people's money here, I'm about planning, right? I mentioned I got 4 kids. You have to be ahead of the game, right? Because there's always something coming up and you never know when that next piece is going to come up. And so when we saw some of that happen, and we're not going to hash what we started seeing happen here, we can do that on another podcast. But when I saw that, I immediately said, it is time to start looking to move my money elsewhere and start protecting it. I love Canada. I don't want to leave Canada per se, but I need to plan for that eventuality. And as we're seeing lower and lower yields here. I mean, the economy is going flat. So you went from a wealth building standpoint, from a planning standpoint, a state standpoint. I'm looking at, hey, I need to protect that future. I want to there's lots of money to be made. Actually, I wish I had gone over sooner, but there's lots of money available there. But honestly, it's about being able to protect your wealth at the same time.
Yeah, for sure. So you like Canada, you want to stay here, but Trudeau, stop pushing Neil. Stop pushing him.
No. I just to be honest about this, I'm doing just fine.
Yeah.
I hate seeing what's going on to the people around me.
100%.
Right?
I agree with that statement. Yes.
Other people don't have the options.
You can see the middle class really getting impacted significantly.
Yeah.
You can.
You know what? If I wanted to, I could get rid of a vehicle tomorrow. Don't want to pay the gas bills? I could get rid of a vehicle tomorrow. Why? Because I don't have to be somewhere and show up in these kind of things. If grocery prices go up, okay, I don't like it. I'm cheap. I've got East Indian blood. We want to deal on everything. Absolutely. But you know what? It's not going to affect me on that level. But there are people out there. Have we seen the tent cities that are showing up? And for me, I can't help. You know what? I'll just say this one last thing. I know you're wrapping up. I got bullied a lot as a kid. And it pisses me off to watch this stuff happening. And so in those situations, somebody has to stand up. Somebody has to speak against it. Somebody has to give opportunity to people as we're watching opportunities being taken away from people. And so that was the thing that really pushed me.
And I think that's why we're sitting here at this table having this conversation, because we're creating opportunity for people who feel like they've been bullied and they're behind the 8 ball and they're like, what do I do? How do I get myself out of this situation? And I think this is one opportunity for them.
You know what? I'll say one other thing here, and that's this. It's been an absolute pleasure and honor assembling this team for people, because honestly, we don't align with everybody, but those people that we do align with, you should hold close to the cuff, bring into your inner circle, and grow together. And I can tell you that this all-star team that we've assembled and that we continue to assemble, we're going to do amazing things with amazing people. And it's been an honor so far. And man, I am excited with what we've already been working on and where this is headed. This group, this club, and this inner circle that we got going on here, it's going to take Canada by storm and flood into the US, boys. And I've had a lot of fun with it.
Awesome. Yeah. You know what? That's a great way to end the podcast. It's been fun so far. Fist it up, boys. Yes. And listen, and if you want to learn more about us, we'll have some stuff down in the show notes for you. And also too, we're going to be doing an event at Smart Home Choice on May 30th. So if you want to learn more, grab your tickets, sit down, have a conversation with us. We're going to do a presentation on why we're investing in the U.S. And you know what? You may have some questions for us that maybe we didn't answer on today's show. So come on out, see us live.
Bring them.
All right?
Yeah.
See,
Absolutely.
feel, touch, bump elbows. Give us a hug. That's what we're all about.
We'll be doing the rounds. There's going to be a lot of events coming up, so stay tuned because we'll put them out there in the social for sure.
Awesome. All right, guys. Enjoyed it.